would you characterize the sell-off we've seen in the FANG stocks, and do you think, looking at the bounce now, that we've got a bottom in terms of valuations?
I think it's hard to say if we have a bottom in. I think anytime you've got stocks that perform so well for such a long period of time, you're bound to go through periods of collection. I definitely feel like as we look ahead, the fundamental outlook for the group is pretty solid. There's still, all these stocks are going after really large markets that are still in sort of the early to mid stages of shifting online. And so, I do feel like there's a good fundamental outlook for the next several years. In the short term, I think it's going to be really important how January plays out. You sort of need the markets to get back to a bullish, sort of risk-taking mentality. And so I think, the first few weeks in January are be a fragile time for the group, and hopefully we can see it recover a little bit.
Mike Santoli, we've seen some pretty dramatic moves lower in these big cap tech names, but when you put them in perspective in terms of the year, with the exception of maybe Facebook, a lot of these names, Netflix, Amazon, for example, Microsoft, they still have double-digit gains on the year.
Yeah, if you look at FANG, including Apple, the stocks are down 20 to 35% off their highs. But if you look at when they first reached the level they're trading at today, it's 9 to 20 months. Right. So in the case of, like you said, Amazon, Netflix, it's within a year that they first got to this level. So you haven't necessarily undone a huge chunk of that outperformance that they had. And they're also back down to what I would say are typically about their average valuations for the past 5 years. So average valuations might be fine for a fast-growing company. When the market settles out, you would think they'd reach for companies with strong balance sheets and cash flow, not necessarily as economically dependent and all the rest of it, plus ones that hedge funds probably have been purging more than others. So they kind of check those boxes off. But if you have to overshoot the other way as much as you did on the upside, then maybe it's not done.
You mentioned Facebook. B of A today says it's their top mega cap pick for 19 because they say it's changes in sentiment that will make the difference. Is that what happened with, say, Twitter this year? They sort of used that as an example for 2018.
Well, I think Twitter was two things. One was the sentiment got a little better. The other was the company was lapping really easily comparable periods in the year ago period. So their growth looked favorable for the first time in a while. I think that company's going to have trouble replicating that as we go forward. For Facebook, it's kind of hard to see how sentiment could get much worse right now. Every day you've got a few new headlines about employees rebelling and people calling for management change. So I definitely feel like there's a good case to be made that sentiment for Facebook has bottomed. We need advertisers to stay confident in Facebook, and that's really sort of what we need to see as we come out of this Q4 and into the Q1 period with major advertisers setting budgets for the coming year. Some good votes of confidence from Facebook's customers will be important.
Michael Graham, I'm curious about a couple of calls that you're making outside of the biggest tech companies. You like Wayfair and Grubhub. Wayfair, smaller furniture seller largely. Grubhub, of course, food. What happened to the narrative about how the FANG stocks, Amazon in particular in this case, were going to crush all of these smaller players? As we head out of this period of tech doubt, how should we think about the impact that these big platform players are having on the smaller stocks, especially given your bullishness for these two?
So we try to be really selective about stocks that are competing against the FANG complex because, as you correctly point out, these companies have so much data, they have so much momentum and market power. So what we look for in these smaller companies that are attacking different verticals is we look for the ability to build a brand. We look for the ability to connect with customers outside of Google and Facebook and Amazon, and we look for them going after large markets with competitive positions that we think are defensible. And so for various reasons, with Wayfair, the home category has been historically difficult for Amazon to attack, so we like them there. For Grubhub, it's very similar. Like, they have done a great job of forming relationships with tens of thousands of restaurants in the U.S. and have a good competitive position, we think, in that sector as well.
Mike Santoli, if we continue to see more weakness in FANG, if the correction is not over for those names, can the broader market rally without them?
Not in necessarily a very big way. I do think that if the market just catches a spark, right, it's very oversold right now. A lot of measures yesterday showed that. I do think the outperformance in that first stage of a big bounce back would be the stuff that was really beaten down much more than FANG, right? So the real risky stuff, the highly leveraged companies and all the rest of it. But then that following stage, yes, I think you need the big growth companies to get sponsored again and to kick in. So I think it's a longer process than just saying, okay, we're going to flip the switch. People like what the Fed said, for example, and it's back to the old winners leading the way.